Hello and welcome to the ET Now Changemaker series. I am Prashasti Bhatt and today we are visiting one of India's pioneering banking institutions, Capital Small Finance Bank. As the first small finance bank in India, Capital Small Finance Bank has taken remarkable strides since its inception in the year 2000 as a local area bank, with a clear focus on financial inclusion, especially in rural and semi-urban areas, driven by a robust 8-year compound growth rate in advances and in deposits. Capital Small Finance Bank has carved a distinctive market presence, expanding its outreach to North India. In February of 2024, they achieved another significant milestone by going public and raising 450 crore rupees in growth capital through an IPO, a testimony of trust and performance. Today, we will explore their vision, achievements, and future goals. To help us do that, we have Singh Samra, MD and CEO, and Mr. Munish Jain, Executive Director at Capital Small Finance Bank. Let's dive in. Mr. Sarvajit, thank you so much for joining us today.
Thank you, Prashasti, and it's great to have you here for this conversation.
Thank you, sir. So to set the stage, I want to start by understanding the impact of the emergence of small finance banks on the Indian banking landscape as a whole, and how has innovation played a role in acting as a catalyst for its growth?
Prashasti, if we see, our country is very vast, both geographically and demographically. So there was a need for niche banks like Small Finance Bank, which cater to the needs of our ever-evolving population, starting from the bottom of pyramid to mid-income levels. So Small Finance Bank have emerged with a key focus to foster financial inclusion. Just briefly about what differentiates Small Finance Bank from universal commercial banks. They are to keep their 50% of the loan portfolio into ticket size of 25 lakhs. So they are to cater to loans which are 50% focus has to be on loans starting say from a lakh of rupee, a few lakh of rupees to 25 lakhs. And they have introduced innovative products to cater to the segment for which they are meant to, and the customer base has also risen substantially. Say to give a cost-effective solution, say to this section of population. So innovation is playing and will keep on playing a very key role in the time to come also for Small Finance Bank.
So sir, in this landscape, tell us how Capital Small Finance Bank is revolutionizing it, and also a little bit about the robust business model that it operates on.
We were the first small finance bank to actually start operations. It was on April 24, 2016. And we converted from another category of bank. We were a local area bank. As a local area bank, we were operating in 5 districts of Punjab, the area which was allocated to us, and there we were 47 branches. So from 47 branches at present, we have grown to 179 branches. So as a local area bank, the model on which we started, we have, even after our conversion, we are sticking to that business model. We have been right from day one focusing on MIG, which we internally describe customers with income levels from 4 lakhs to 50 lakhs. We are very well diversified on both sides of our business. Both sides of business, say we talk about deposits or loans, that come from this segment itself. The loan book is almost 100% secured, where the average ticket size is around 14 lakhs of rupees. And when I talk about the liability business, the liability business is also totally retail focused. 95% of the business comes from retail customers. And our aim is that we become the primary banker of this customer, and we take care of his present banking and financial needs and the needs which are going to arise as his income levels are going to enhance in future as well. So this has resulted in stickiness of the customer as well. We call ourselves, we are differentiated among other small finance banks since we cater to the middle income group segment.
So you have been talking about the middle income segment, right? Tell us how Capital Small Finance Bank was able to position itself as a differentiated bank for this segment. What did it get right?
So we are into all type of products. Say when we start from a rural, unbanked rural branch to a semi-urban branch to a urban branch. Say in rural, say especially in place like Punjab where there is a huge demand for agri loans. So agri loans also we are catering to the middle income group. With all, as we have positioned ourselves, we give agri loans to progressive farmers whose requirement is from 5 lakhs to 25 lakhs. So there's actually, say the banks like the, say the commercial banks like the nationalized bank or the private sector banks, of course, they also cater to middle income group, but it is one of their segment. The key focus sometimes is not there, but for us it is bread and butter. So our key focus is on this segment, and this segment is evolving, and if we see, there are a lot of studies which say that in coming years this size of population of middle income group is going to be 40% of India's huge population. So we feel that a specialized bank like us which cater to their needs, there was a much need for that, and this is actually how we have chosen and we have stick to it. And even in our future growth strategy, we will be catering to this segment.
Your main, one of your main focus areas is also providing easy access to need-based credit and reducing the dependency on money lenders. What kind of impact have you created in this endeavor so far?
For 16 years, we were local area bank. So when I talk in the initial years, say when I touched rural and semi-urban sector, so we see that at that point in time, say the credit needs of a farmer were, of course, it was being taken by the banks present around, but it was mainly being taken care by, say, I would not call it money lender, by the commission agents or who were facilitating them to sell their crop. So the model was like this. At one point of time, we have heard even before we started that they used to charge very heavy interest rates on that. But now how the things have evolved. Now if you see that the middleman has been totally eliminated. When I give you example of this agriculture procurement, and it is being procured by the state or the central procurement agencies, and then they need a nodal bank. The amount is remitted directly to the account of the farmer. So this is how the dependence of farmers on money lenders or on the middleman has reduced, or I would say, if I presently see the landscape, it has almost been eliminated. So this is how our bank or other banks are also have played a role to this. This was just one example. Say for us, all the products that a middle income group segment needs have been evolved, and they are put in place and made available to our customer even at the remotest of the rural branch, so that we remain his primary banker and he need not go presently or even in future to some other bank or financial institution or intermediary for his financial and banking needs.
Got it. So you have also been talking about rural and semi-urban areas. So tell us a little bit about how you are accelerating your efforts to provide next-gen experience in those areas particularly.
Again, I'll take you to the initial days where there was, we have seen when we started, when we opened our first rural branch, I'm talking about the year 2000, so more than 24 years back. Say the rural area, we felt that maybe a ruralite is deprived of the modern world-class banking facilities. Say what we initiated at that time, we brought in those services, and that also at a low cost. Now with the evolution happening, with the digitalization happening, are upgrading ourselves and try to give all the latest tools or the facilities that any of our customer needs. so that he takes advantage of the digitalization. Earlier, the digitalization transactions used to be very less, but now the present number has accelerated to 85%. There used to be a time when a ruralite would say, I don't need an ATM card, because he was shy of that. He was very new to that. So this is how slowly we have taught them that how useful these tools can be, and how it can make life easy and banking easy for a common man.
Got it. Sir, you have been a part of this industry for such a long time. You have spoken about how you've seen it transform, how you have played a role in transforming this industry. How do you foresee the future of small finance bank and its growth in India?
I think from small finance bank, say in this period of 7 to 8 years now, they have been into operations. They have established themselves to be strong institutions. There's a much need for banks like that to who cater only to this section of society. It's a very vast and huge population. So I see that in coming time, these banks have even more vital role to play. Say in the development phase that our country is. So these institutions will keep on playing their role in making India great and making India the 3 trillion economy to which everyone is focusing towards.
Well, this was indeed a very insightful discussion. Thank you so much for joining us
Pleasure
today.
too. Thank you.
So I'm very happy to share that small finance banks, for a country, vast country like India, which is widely diversified, are playing a very, very important role of taking this banking to the grassroots level.
Hi, Mr. Manish. Thank you so much for being here today.
Thanks, Prashasti, for inviting for this particular session and this particular show and making me share my perspective on the same.
Mr. Manish, I want to start with taking your perspective of the small finance banking in India. You come with over 2 decades of experience, not only in the industry, but in this institution as well. So how are you viewing the growth of this sector? And what role is Capital Small Finance Bank playing in its development?
If we go back and see, I joined this organization around 20 years back. I'm dating it back to the year 2000 when we were setting up the local area bank. So I being the part of the journey, that whole of the transition, that is from a local area bank then to the SFB and in the present avatar. So which was a very interesting journey. So I'm very happy to share that small finance banks, for a country, vast country like India, which is widely diversified, are playing a very, very important role of taking this banking to the grassroots level and ensuring the financial inclusion. So each of the entity is doing its own part of the job, having the financial inclusion agenda in sight. My sense is the current year, that is FY25, SFBs as a whole will grow from 22 to 25% CAGR growth rate for this year on their advances side. And I see there will be an increase in the profitability for all the small finance banks put together. It will be fueled by increasing their efficacies. I feel there will be a stable credit cost and there may be some pressure on the interest margins. So if I talk about Capital SFB, I strongly believe we are a differentiated banker in this differentiated banking stream. We have identified a niche for us, that niche being middle income group. We call ourselves to be the middle income group specialist, and we are a Suru specialist, that is semi-urban and rural area. Statistically, we have 75% branches in Suru with 78% deposit from the Suru and with 57% advances. So we are there to the grassroots level to help this country get more and more entrepreneurs.
So you mentioned middle income segment as your focus area. What other segments are you focusing on, and what other lending opportunities are you targeting? And when it comes to the borrower, what is your value proposition?
If we look into what we do on the advance side and what we do differently. First, if we look into the overhanging principles, we are a middle income group lender. That's the perspective is, we are not a lender for below poverty line, neither a lender for the super HMIs. Our target segment is very clear. We are an MIG lender. Secondly, we are a secured lender. Over 99% plus book being secured and 86% plus book, it is collateralized by movable. And we lend for the purpose. What I mean by this, the money which we give to the borrower shall generate cash flow for him or help him is having his housing need fulfilled. So if these things put together, we have more than 85% of the portfolio who is in this segment, and we are a primary lender. We never intend to be the standalone term lender. We call ourselves to be the cash flow lover, that the client's complete cash flow shall be routed through us. So we being in the primary banking relationship. Keeping these overhanging principles in sight, we are typically chasing three segments, or I can call it 3 baskets. One being agriculture, which is presently constituting around 35% of the portfolio. Second being mortgage, consisting of both the housing loan as well as the LAP, which constituting around 27% of the portfolio. Third being MSME, which is constituting around 21% of the portfolio. So as far as the value proposition, we being a specialist middle income group lender, we are here for our efficacies, we are here for the quickness, and we are here to bring entrepreneurial out of the country. And if I talk about the competitive landscape, I say one of the competitive landscape is the public sector banks. I believe given our outreach, high customer connect, rightful pricing, and deep penetration, we have a slight edge, and which is being coupled with the impact of the consolidation in that particular sector, which give us a higher opportunities. So we as an organization and doing it our own way, building up this organization and this country to contribute to the development of this country.
What are your strategies when it comes to business expansion, be it expanding to different branches or tapping into new geographies, especially vis-a-vis the competitive landscape?
We has our origin as a local area bank, so which make us learn few important lessons. So accordingly, our branch, I will say our expansion philosophy is a contiguous. That is, we expand to the neighboring state, neighboring geography, which help us in understanding that geography much faster. And we follow a concept, what we call it a combing and carpeting. What I mean by this, firstly, we open a branch at the economic headquarters. We comp, my perspective is comp from perspective is understand the geography, find our fitment for that geography. When we find that geography is fitment for it, we carpet. So I typically have this perspective. Wherever we go, we don't want to be just present. We want to be thickly present. We are a purely retail franchise. The perspective is when a retail gentleman goes any side, any of the direction, 15 kilometers, he find over one or other branch, which will bring trust for the brand. And that is the perspective of the growth. And if I talk about our branch expansion, we started this fiscal with 177 branches, and we intend to close this fiscal with 200 plus branches. We, as part of the current year journey, we want to depenetrate in our home state, that is Punjab, and additionally, we want to expand our wings in Haryana. We call that Haryana is going to be our next growth driver. Internally, we call it, we want to make Haryana our next Punjab. And I can also say, additionally, we will be continue to expand our wings.
So we have spoken a lot about expanding to new geographies, creating more branches and growth of Capital SFB in general. Tell us about the future plans for this institution. How are you planning to grow sustainably and profitably in the current business scenario? And what value proposition has Capital SFB put in place to create an impact?
Year FY24, in addition to get public, we achieved one more important milestone. We crossed over 100 crore profit mark. So, and with all these ingredients now made available, so I am very confident of our next journey. And the levers for growth, or I can say what are the way we look forward for the growth. First and the foremost, I am looking forward for a growth opportunity which exists in improving our CD ratio. If you look into our numbers, over FY24, average CD ratio remains 79% or less than 80%. We want to improve the CD ratio to mid to high 80s, which will help us in improving our margins, NIM. Secondly, we will continue to expand on the NIM. With this interest rate cycle taking a change, or with the interest rate cycle remain highly elevated for a longer period now, we are seeing that in Q1 we improved our NIM to 4.2 from 3.8 a quarter back. In addition, not just to retain at the high elevated level, we're looking forward for the expansion. CD ratio being one of the driver. We also look forward to increase our non-interest income. So all these levers put together with an elevated growth, I'm looking forward to a ROTA expansion. So ROTA expansion, I just like to share, we are the organization who is improving the ROTA consecutively from last 5 consecutive years, which includes the COVID periods. That is FY22, FY23. And I believe we are the only small finance bank. We improved the ROTA on those tough years.
Well, that was great. Thank you so much for being here and sharing your insights with us.
Thank you. Thanks a lot.
As we wrap up today's discussion, it's clear that Capital Small Finance Bank has established itself as a key player in the small finance banking sector. But that's not all. It's also leading the way with customer-centric approach, innovative technology, and deep commitment to financial inclusion as a middle-income group expert. The insights shared by Mr. Singh Samra and Mr. Munish Jain highlight how the institution is shaping the future of banking in rural and semi-urban India, while continuing to expand its reach and impact. Thank you for joining us on this episode of the ET Now Changemaker series. Stay tuned for more stories of innovation and progress.